Hello trading friends, and welcome back to Forex Focus, brought to you by IG. My name is Paul. I'm filling in for Frank today, and today we're going to be talking about the euro nearing all-time highs against the yen as Japan's economy falls behind Germany as now the fourth largest economy in the world. Recent price action has shown, again, we've talked about this previously on other shows, but the yen actually now again continuing to weaken against all major currencies, especially the euro here. Again, recent price action has again seen a euro climb up to near to the 162 levels. We're up 4.6% year to date. Again, it's an aggressive move with the further weakening in the yen. They've shown no kind of choice but no real movement to raise interest rates in Japan. They're still sitting slightly negative at the moment, where the rest of the world has moved interest rates higher over the last few years. Again, it's contributed to the weakness in the yen. Basically a similar story that we've seen over the last 2 years. If we look out further, historically, we're sitting near all-time highs on euro-yen, highs that kind of predate basically 2008. We're looking at 15 years, almost 14 years, or almost 16 years, excuse me, of highs in euro-yen. And I mean, really, the train hasn't stopped. It's continued to go on higher. And again, there's nothing that says it can't reverse back. But this is kind of the past price action as we've seen its continuous climb since the 2020 lows. But yeah, so the yen continues to take a beating. And then as we look at our GDP rankings around the world, we've seen a pretty big shift here in the last 5 years. U.S. obviously has stayed on top, and China being number 2. But if you even look at this graph, there's weakness across the board here. Japan actually slipped into a recession. Germany's possibly headed towards a recession. The UK is also in a technical recession. When we say technical recession, that's 2 consecutive quarters of negative GDP growth. So you have 3 of the top, maybe 4 of the top 6 GDP countries in a technical recession at the moment. But yeah, I mean, so a huge movement here. Germany obviously taking the 3rd spot in Japan with its weakness, which really hasn't seen the growth. But if we keep going on here, as we see, Germany is slightly taking over. There's the negative growth out of the pandemic in 2020 has really affected Japan with a growing older population in Japan. They've really struggled to continue with their economic growth. Germany, as we know, as an industrial superpower, is still picked up, but really only narrowly. And I mean, there's nothing that says this can't reverse or anything like that. But right now, these 2 economies, both of them aren't roaring hot, growing crazy amounts year on year. But it is an interesting dynamic here to see that Japan has lost its luster as the 3rd largest economy in the world. We'll see if that changes. But as we look at Japan, basically its GDP over the last 2 to 3 years here, we now see 2 consecutive, again, negative GDP prints that points towards a recession. It does look to be a shallow one because, the last quarter GDP only being down 0.1% isn't a huge loss. Does at the moment look to be a shallow recession, but we'll see if this reverses in the coming months. But this does basically leave the Bank of Japan with not much of a choice here as to whether or not they can raise interest rates yet. Usually, you only raise interest rates kind of from an economics background. You only raise interest rates when your economy is doing very well, so the economy can absorb the kind of tightening that higher interest rates bring. And Japan obviously has been slow to move their interest rates higher. They haven't actually moved them higher at all yet. So we'll see if that dynamic changes, but you would need typically to see higher GDP, higher economic growth for our country to start raising interest rates. And as we move on here, we'll take a look at IG's client sentiment. Currently, right now, we have 80% of our clients are short, 20% are long. Doesn't necessarily an indication of where the euro-yen market is headed, but this is technically seeing that our traders are taking a typical short position on the market. while we're at all-time or near all-time highs. Again, it does not mean that this euro-yen market can't continue higher. It doesn't mean it can't go lower. It can actually go in either direction. But yeah, that's where we're seeing clients positioned at the moment. But that's it for today.